Welcome to this year's Green Energy Conference. We've been hosting these events on energy transition investment for over a decade now, and what an eventful decade it has been. Looking back, 2016 was the year when world leaders came together in Paris to agree a global energy transition. And in that year, energy transition investment had just reached $400 billion, and almost all of it went into renewable energy. In the UK, coal and gas delivered nearly 4 times more electricity to the grid than solar and wind, and less than 40,000 electric vehicles found their ways to daring buyers who were unfazed by range anxiety. But it was already clear back then that clean technologies were quickly maturing and building momentum. And a decade later, the energy transition generated over $2 trillion in investment just 5 years after breaking through the $1 trillion mark. And over half of all the electricity added to the grids around the world over the last 10 years was generated by wind and solar. And millions of EVs are now being sold each year, generating as much investment as renewable energy and accounting for all the growth in an otherwise shrinking global passenger vehicle market for the 6th year in a row. The UK also celebrated a major milestone, successfully phasing out coal from its electricity mix and deriving more than 2/3 of its power from clean sources, reducing emissions intensity of the grid by 74%. And the continued savings and better performance achieved by clean technologies mean that the projected cost of completing the transition continue to fall. So we have a lot of reasons to be positive and optimistic, but as we expected, the transition has not been easy or linear. A decade of volatility, including impacts on energy accessibility, has forced policymakers to be more clear-sighted about the strengths and weaknesses of our energy markets and the need to invest in their resilience. And with most scaled renewable energy involving some intermittency, we need to be honest in acknowledging that behind each new record of renewable energy penetration that we celebrate, there remains a fleet of dispatchable gas generators that have been needed to fill the gap. And Europe's resolve in quickly finding alternate, reliable partners to supply the gas, oil and metals and agricultural products the region needs has been critical. At such moments, we see that accelerating clean but firmed energy investment and electrification is a fundamental element of energy security policies in Europe and in much of the rest of the world. And our own experience at Macquarie mirrors the different phases that the energy transition has gone through. So 2 decades ago, we started with a handful of investments in the first wave of renewable energy products in Europe. And since then, we've built one of the world's largest diversified portfolios of specialised renewable energy developers and assets. And in response to the growing demands for capital, the de-risking of the investments in the sector and the increased investor appetite, we've been moving to increasingly invest via our fiduciary strategies. And at the same time, our energy traders are helping utility clients hedge the risk of low wind speeds, leverage battery storage for flexibility in power markets, and reliably supply gas where it is needed. In the last few years, we've made our first investments in battery manufacturing, electric mobility, sustainable aviation and shipping fuels, and critical minerals recycling. And today, all our businesses and most of our clients are involved in or impacted by this transition. It's one of the key investment themes, and we see that trend continuing long into the future. Now, progress over the next decade will not be any more linear or easy than the last 10, but Macquarie intends to remain at the forefront of meeting the evolving needs of our clients, communities, and our governments.